Which SIP is best for long term? Sounds like a simple question, right? But the answer isn't it one size fits all. It depends on your goals, your time horizon, and your comfort with risk. Let's break it down for you in the simplest way possible. SIP. SIP or systematic investment plan is one of the smartest way to build your wealth over time. But with so many options out there, how do you choose? Well, it all starts with your goal. Are you saving for retirement? Your child's education? Maybe a dream home? If your goal is long term, say 10 years or more, equity mutual funds are the best way to go. Why? Because equity funds invest in stocks and historically stocks have delivered higher returns compared to other investments. Within equity funds, you have got a few choices. Let's explore what is that. Number 1, large cap funds. These focus on big and established companies. Think stability and consistent returns. Perfect if you're a cautious investor. Number 2, mid cap and small cap funds. These target smaller companies that have massive growth potential. But hey, they are not for the faint hearted. They are a bit riskier. And finally, balanced advantage funds. These are like the best of both worlds. They adjust between equity and debt depending on the market. Now you might ask, what about debt funds? Debt funds are safer but more suited for short-term goals. If you are in this for the long haul, equity SIPs usually comes out on top. But here's the thing. Why do we even need to invest in equities for the long term? The answer is simple. Inflation. Inflation is sneaky. It quietly erodes the purchasing power of your money. If your investment don't grow faster than inflation, you're not really growing your wealth. Equities with their potential for high returns help you beat inflation and keep your money's value intact. Now let's address some common question. Is SIP 100% safe for the long term? The honest answer is SIPs reduce risk by spreading your investment over time. That's called rupee cost averaging. But they aren't immune to market ups and downs. And the good news, market usually recover and grow in the long run. But if you are looking for a little more stability, consider index funds, hybrid funds, or even debt SIPs. Just remember, long-term investing is about riding out the volatility for those higher returns. Now, what if your horizon is shorter, like 5 years? For a 5-year goal, it's important to balance growth and safety. And here are some good options. Large cap funds. They are steady and reliable. Hybrid funds. They mix equity with debt for lower risk. Dynamic bond funds. Perfect if you lean toward debt investments. The trick is to access your comfort with risk. Ask yourself, can I handle some short term ups and downs? If not, go for something more conservative. Alright, let's wrap this up. What are the key takeaways? Number 1, understand your goals first. For long term investing, equity SIPs are best. Number 2, know the risks. SIPs aren't 100% safe, but they are designed to handle volatility. Number 3, beat inflation. That is the only way to ensure your money retains its value over the years. And finally, match your timeline to the right type of fund. If it's 5 years, go for large cap or hybrid funds. So, are you ready to start your SIP journey? The sooner you begin, the longer your money has to grow. After all, the best time to plant a tree was 20 years ago. And the second best time is right now. Subscribe to our YouTube channel for more financial and investment guidance. Thanks for watching. If you have any doubts regarding this or any other financial decision, don't hesitate to book an appointment with our financial experts. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like. If you are new to our channel, please do subscribe. Thanks for watching.